host Nick Toka. On today's show, President Trump may trigger decorrelation between Bitcoin and the Nasdaq, according to macro guru Luke Gromen. Also, here's why Bitcoin fell 12% in quarter one despite heavy corporate buying, and the era of U.S. Treasuries and stocks as global reserve assets now over as gold and Bitcoin take over, says Arthur Hayes. This on a bloody Sunday. We'll go through the charts, market analysis, all this, and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is April 6, 2025, and the markets are in the blood red today, boy. Back down to their support levels. Let's get right into some market analysis without further hesitation. As we see Bitcoin down 5%. It was down a little more. Made it down right to its support level at 77,500 few hours ago, but everything in the red. Interestingly enough, if we go into the 1 hour chart, we see greenery, right? So we hit the support level and hopefully things are back up for good. Bitcoin down right now for the day 5.5%, 79,145. Ethereum down 12%, 1,598. Solana down 10%, make that 11%, $107. XRP down 10%, $1.93. Doge down 12% at 14, just under 15 cents right now. Can we say buy the dip? Probably a good idea. I definitely bought the dip earlier today. And again, if we go to the daily in our crypto bubbles, we see every single thing in the red. If we flip into the hourly, every single thing in the green. So we hit the support levels and, everything follows the biddy. So Bitcoin hit that support level at 77,000 and right away started to bounce. And for the day, all red as we see. But for the hour, even Fartcoin up 8%, Hype up 5%, and this is for 1 hour, right? Bera 4%, Walrus 3%, every single thing in the green for the hour. Zooming out to the weekly, we see that 90 some odd percent, 95% in the red for the week. The tariffs did take hold of the Bitcoin market despite what happened on Friday, where this we call decoupling from the traditional financial markets did kind of take place, where for a while now, a good 3 to 6 months, Bitcoin was following the stock market. If the market was up, Bitcoin is up, market down, Bitcoin down. But then suddenly the markets tanked Thursday, they tanked Friday, but Bitcoin was up Thursday and sideways Friday. But what happened was it was just a bit delayed, and of course the financial markets close on the weekend, but Bitcoin's running 24/7 and the whole crypto market's running 24/7. I'm curious actually if I take a look right now at the Nikkei. Always a good indicator to kind of check out what's happening the next day. And let's make sure this is for tomorrow. Yeah, Nikkei is down as we speak, already down 6% tomorrow. I don't know if you can see that on my phone, but down 6% to start the day. So looks like another down week, or at least another down day on the traditional financial markets. Let's see what happens tomorrow morning. But in terms of Biddy, I think and hope we hit the bottom, as at least whenever we got to this support level at about 77,000, 76.5, Bitcoin has pumped again. So it hasn't really gone below that. Zooming out to the monthly here, we have, again, about 95% in the red for the month. And I'm going to actually open up tradingview.com here and check out the Biddy price. Let's expand this over so we can get a good view. And this is kind of what I wanted to show right here. Now, multiple times, once we hit this 76.5 is the lowest it's gone. And here, again, 78,000, 3 times, very predictable. We hit it once, we hit it twice, we hit it 3 times. Once this support level hits, then we see a big jump up. Support level here, a big jump up. Support level here. I'm anticipating a big jump up, and I'm hoping this time it's a continual jump and things don't actually go further down. And if we do go further down, then we're going to be retesting the old all-time high, which I find very, very, very unlikely, folks. But the Nikkei Tokyo Exchange definitely down as we speak. So we don't want to follow those guys. Current market cap, we have Bitcoin at $1.57 trillion, Ethereum 192 billion, XRP 112 billion, Solana 55 billion, Doge 22 billion, Tron 21 billion, Cardano $20 billion. Total crypto market cap has lost about $2 billion. Pardon me, $20 billion since Wednesday, which is not bad because the traditional stock market lost $3.5 trillion, right? Currently, Bitcoin way up. This is the highest I've seen it in terms of market cap, holding 63.3% of the total crypto market cap right now. Ethereum way down, 7.7% of the total market cap. XRP holding steady, 4.5% of the total market cap. Crypto Greed and Fear Index, we are currently in a 23. It says fear, but I'm pretty sure this is considered extreme fear at 23. Yesterday was a 34 in fear. Last week was a 34 in fear as well. There are 1,102 days left until the next Bitcoin halving in 2028, with 158,713 blocks left to mine until that time. Total assets market cap, we've got gold up top, 20 trillion, 20.5 trillion, Apple 2.8 trillion, Microsoft 2.6, Nvidia 2.3 trillion, Amazon 1.8, Google 1.7, silver 1.7, Saudi Aramco 1.69, Bitcoin now down, number 9 position, 1.571 trillion, and Facebook 1.278. You can currently get 1,264 satoshis for one fiat US dollar. The U.S. debt clock keeps on rolling, currently at 36,692,600 million, which equals to owing 107,278 per U.S. citizen, or 323,048 per U.S. taxpayer. The Doge clock tells us they have currently saved the U.S. taxpayers $288 billion, which equals to $2,566. So they basically saved on a Sunday, folks. They have saved every taxpayer since yesterday $60. Not bad. 60 US dollars on a Sunday everybody made, thanks to good old Doge that everybody hates. Still interesting. Kind of a funny one with these guys. And half the people are out there protesting in front of Tesla dealerships. Meanwhile, he made them $60 each. So kind of funny. One day it'll come out and, you know, he'll end up a hero. But for now, the mainstream media has got everybody completely spooked and backwards about this whole thing. Now, there was an interesting article I read today, which basically said that, you know, everybody's freaking out about the stock market, right? But that is not consistent with the common folks. So it was 80% of all the assets in the stock market are owned by the top 20% richest people. The other 20% is owned by the 50% of the, you know, common folks like you and me. And then everybody else owes money. Like, they don't own anything on the stock markets, right? So everybody's crying boo-hoo about the stock market, but the common man knows nothing about the stock market. They're not invested in any stock market. They owe. So kind of, you know, they're in debt, like big time, right? So interesting. You know, people need to get with reality and see that it's hurting the rich folks. And moreover, you know what the rich folks are doing, guys? They're shorting the market. They're betting now that the market's going to go down. It's not like they're losing money. They're putting short positions that, you know, they're going to get wrecked too, I'm sure. What's going to end up happening likely is, because these tariffs are taking place, it's very likely now they're talking about 60% recession. You know, Chase came out today and said, "No, there's a 60% chance we're going to have a recession in 2025." So recession comes in, Fed has to then come in and do something about it. What are they going to do? They're going to reduce the interest rates. This is what we've been talking about the whole time. They reduce the rates. Bitcoin and stocks then fly high. We've talked quite a few times about getting the rates reduced, because this is the year that the U.S. debt they have to refinance $10 trillion this year of the U.S. federal debt. And if they don't do it with low interest rates, they're pretty much screwed. So that's going to be an assurity. I've said it before, one way or the other, those interest rates are going to come down. You're talking about a lifelong professional in Trump who basically buys property, uses that property as leverage, gets low interest rate, buys more property with that, gets more loans with using that property as equity at a low rate, and so on and so on. So why would he not be fighting for lower rates for the entire U.S. economy? So people should be thankful of what he's doing here. It's Powell that's being an idiot. Trump requested that he lowers the interest rates. He didn't. No, inflation is a little high. We need to keep rates up. That was his response. Well, lower rates twice this year, 0.25% twice, which is jack all in the grand scheme of things, right? They need rates to go from 4.5% to, you know, like 2%, 1.5%. When this happens, and it's very likely this is going to be going into the second half of the year, that something's going to have to change here, right? Because the elitists who own, you know, everything in the stock market are going to be crying again, boo ha ha, our stocks, we're losing all our money. And Powell, of course, is going to have to serve the elitists as always, and he's going to have to come in and reduce these interest rates. Once he does, they can then refinance their debt at a lower interest rate. Then people have more money to put into risk-on assets like Bitcoin, like the stock market. Lots of money is going to pour in. Everything's going to boom. But for now, short term, you know, everybody's shit in their pants. You know, in times like these, you buy the dip, right? You don't sell off. You buy the dip. You know that because you are a savvy investor. If you watch this show, you know that when things are on sale, that's the time to jump in and buy things on sale. When things are, all-time highs, maybe that's not exactly the time you want to start buying, right? It's the time you want to maybe sell. So things are now, the crypto market, pretty much everything is at a 1-year low as we speak. The financial markets, we're talking prices back down to the stock prices of about 10 years ago. They basically wiped everything out for, the past 2 years, increases all in a week. So it can happen fast. And again, now is the time to swoop in, buy low. In a month's time, we're going to see, because they're not going to announce it, of course, but we're going to see Berkshire Hathaway, Warren Buffett, he's going to say, oh yeah, we're not in cash anymore. We started buying some stocks when the prices came low. We thought they were now good values. But as of today, they say that they're still in cash. President Trump may trigger decorrelation between Bitcoin and the Nasdaq, according to market guru Luke Gromen. Now, I feel like this has already taken place on Friday, but it's such a short time span, it's hard to know, but I feel like this is the direction we're going. Macro investor Luke Gromen says that the White House may have caused a massive change in the way Bitcoin trades. In a new interview with Natalie Brunell on Coin Stories podcast, Gromen calls attention to the America First investment policy, a memo released by the Trump administration in February that aims to make the U.S. foreign investment policies more cautious and conscious of national security. Gromen, the founder of the macroeconomic research from Forest for Trees, says that the memo essentially directs China, take your money and go home. We don't want it here anymore. With all of the foreign capital invested in U.S. markets, Gromen says the Nasdaq index will likely suffer capital outflows, while Bitcoin, as a neutral global asset essentially exempt from tariffs or political agendas, will shine, breaking the correlation between the two assets. That, I think, will ultimately be a catalyst to the separation of Bitcoin and the Nasdaq, and that, I think, is starting to drive Nasdaq down. It has a long way to go because multiples are high, and in the short run, traders control the flows. Bitcoin is levered Nasdaq. I get it. It's high beta Nasdaq. In the short run, if you back up a 5-year or 10-year chart, you could see very clearly these periods where Bitcoin has massively outperformed Nasdaq, but they still tend to go directionally similarly. When Bitcoin's up, Nasdaq's up, and vice versa. The American First Investment Policy memo, I think, will start to break that correlation, because I think that right now, the short run, that correlation is holding. But at some point, I think capital flow is going to see Bitcoin for which it is a neutral reserve asset linked to energy, uncontrollable by any government. And I think it'll start siphoning some flows off from the Nasdaq as America continues to say, listen, you want to invest in some factories here? Great. Otherwise, get out. And that's a lot of capital that's got to get out. And we're seeing gold benefit already. I think what we're seeing in gold is a precursor to what we'll see in Bitcoin. And here he is. Yeah, definitely, Bitcoin originally and still is more, they call it digital gold, and they call it that for a reason, and a decoupled kind of scenario that is not following the Nasdaq or following traditional financial markets is more that I would expect. So Bitcoin fell 12% in quarter one despite heavy corporate buying. And we see a lot of corporate buying, folks. We see a lot of whales buying Bitcoin but the price is still kind of suppressed. BTC closed quarter 1 2025 with a 12% decline due to selling pressure from long-term holders offloading their assets into ETF outflows. The first quarter of 2025 turned out to be the worst quarter Bitcoin has seen in 7 years. The leading digital asset lost 12% of its value between January and March, despite heavy accumulation from corporate entities. The market, what's happening is, retail investors, you and me, are selling, and the corporations and the whales are buying our Bitcoin. Soon there's going to be no Bitcoin, guys. The MarketAnalysis platform CryptoQuant explained that long-term holders on-chain activity is why Bitcoin plummeted significantly despite major corporate buying. Corporate entities accumulate heavily. Public companies that embraced Bitcoin acquired a total of almost 92,000 Bitcoin in quarter 1. The business's intelligent firm Strategy, formerly known as MicroStrategy, made the highest purchase totaling 81,000, worth about $8 billion. The entity now holds 528,000 Bitcoin, worth $45 billion. At press time, CryptoQuant said that the 8888 Bitcoin acquisition by the stablecoin issuer Tether was surprising. The purchase brought the company's BTC stash to 92,000 Bitcoin, valued at approximately $7 billion, $8 billion, make it, at the Bitcoin's current price. Besides Strategy and Tether, other companies that bought BTC include venture capitalist firm Metaplanet, healthcare technology provider Semlar Scientific, and the Blockchain Group, which develops blockchain technologies for business sectors. Between January and March, Metaplanet topped its Bitcoin stash with 2285 Bitcoin. Semlar Scientific acquired 1,100 Bitcoin, and Blockchain Group 605 Bitcoin. In addition to these acquisitions, a few more companies have revealed plans to acquire Bitcoin in the new quarter. One of them is the leading Bitcoin mining entity, Marathon Digital, which unveiled a $2 billion stock sale geared toward buying BTC. Also, the electronics retail company GameStop proposed a $1.5 billion convertible note offering to buy Bitcoin after adopting a Bitcoin reserve strategy. And it goes on to talk about long-term holders sold, but again, as we sell, the companies, the big corporations are buying, so the long-term holders sold amid all these acquisitions and BTC purchase announcements. BTC closed quarter 1 2025 with a negative return of 12%. CryptoQuant attributed the decline to selling activity by long-term holders. The supply of this cohort of investors dropped by 178,000, adding selling pressure to the cryptocurrency and offsetting the bullish momentum from corporate buyers. Moreover, the selling pressure was intensified by outflows from spot Bitcoin exchange traded funds. ETFs withdrew at least 4.8 billion of these funds in the first quarter. As the second quarter begins, CryptoQuant sees an impending battle between fresh purchases stemming from corporate demand and selling pressure from existing holders cashing out. It remains to be seen if BTC will end quarter 2 on a positive note. Yeah, so the retail folks are dumping it. Strangely enough, even the long-term holders and the corporate folks are buying it at a discount. Let's see what happens. Personally, I haven't sold, and I don't intend to until potentially later in the fall. And I feel like we're still following these 4-year cycles, and let's hope we are, because we've got a long way to go. We're going to find out a lot tomorrow because the Nikkei is down another 6%, and Bitcoin's already at what we call the support level at 77,000. So we need to hold that level to kind of get back to this 82, 85, and then once we get to 85, then we can continue going upward from there. I think there's going to be a big realization that Bitcoin has nothing to do with the stock market, and let's hope that both retail investors and corporations take advantage of this dip and start buying in and bringing more liquidity into Bitcoin as of even, tomorrow and as of this week. The era of treasuries and stocks as global reserve assets now over as gold and Bitcoin take over, according to Arthur Hayes. BitMEX founder and crypto investor Arthur Hayes says gold and Bitcoin are effectively replacing the U.S. Treasury and equities as the predominant gold reserve asset. In a post on social media platform X, Hayes says President Trump was particularly elected by Americans who feel that they didn't share in the alleged prosperity stemming from going off the gold standard in 1971. Absolutely, he's right. Hayes says that if the White House follows through on reducing its debt and current account deficit, then other countries will be forced to finance their economies by selling their U.S. stocks and bonds, creating a permanent change in the global financial order, since the finance ministers around the world won't take a chance that Trump will change his mind. The end of U.S. treasuries and, to a lesser extent, U.S. stocks is the global reserve asset. If the U.S. current account deficit is eliminated, then foreigners do not have dollars to buy bonds and stocks. If foreigners have to juice up their own nation's economies, they will sell what they own, U.S. bonds and stocks, to fund their nation-first policies. The crypto investor also notes that he believes that gold and Bitcoin will emerge as the winners of a shifting global financial order. The return of gold as the neutral reserve asset. The dollar will still be the reserve currency, but nations will hold reserves in gold to settle global trade. Trump hinted at this because gold is tariff exempt. Gold must flow freely and cheaply in the new world monetary order. I also believe that Bitcoin falls into exactly the same category. Let's read on. A lot of those who had it good are in the denial stage and share a delusion that somehow things will turn to normal. For those who want to adapt to a return to pre-1971 trade relationships, buy gold, gold miners, and BTC. Hayes also suggests that Trump-induced economic shockwaves may have finally broken the correlation between Bitcoin and the Nasdaq. Bitcoin holders need to learn to love tariffs. Maybe we finally broke the correlation with Nasdaq and can move on to the purest form of fiat liquidity smoke alarm. Yeah, so here we are in the crossroads, right? He's showing, that's just what I was talking about. It could go down. If we're not decoupled from the Nasdaq, we could go down, or we could hit, as we did today, our support level at 77,000 and go up. I'm feeling like it is the latter, and this ideally is short-lived in terms of the tariff interruptions for Bitcoin. The traditional financial markets are going to keep feeling this until Trump feels out the international leaders. I strongly think that, look, there's two ways to look at this, okay? First, is it that Trump legitimately wants goods produced in America, right? So I saw a great example today. The guy had a one of those Zippo lighters, the square rectangular ones that you kind of go click and you light it all in one shot, right? So his example was he had a Chinese version of it and he had the American-made version of it. And he said, okay, this Chinese one costs $25 and the American one costs $30. So, of course, everybody's going to buy it. It's the exact same thing. Everybody's buying the Chinese one for $25. Now, if there's tariffs, so in that $25, $5 goes to the American importer, right? And $20 goes back to China, right? So now tariffs. Suddenly that same $25 lighter will now cost $35, the Chinese one. whereas the American one will still cost 30 bucks. Fine, it costs a little bit more, but which one will people buy now? They will buy the American one, because suddenly the Chinese one costs 35 bucks, the American one costs 20 bucks, or sorry, 30 bucks. People are going to start buying the American made one. Even though it's a little more expensive, that money then stays in the States. That factory suddenly that used to sell, 1 million lighters now are selling 3 million lighters. More workers then have to get hired and to make these lighters. So it does effectively boost the economy long term. If you look at that, just a small example with a lighter, look at everything, right? Imagine the auto industry. Suddenly everybody's buying, American, right? Ford, GM, Tesla. Then more jobs are going to be needed and the economy is going to get stronger. So this is one approach. Okay, the other possibility, and I feel like it's a combination of both. The other is what we talked about earlier, and that is Trump came into office. He said, Jerome Powell, head of the Fed, lower interest rates. We need lower interest rates. He said, no, in his normal bullshit, elitist way. Oh, no, we don't. We have to wait and see, all this crap, right? He asked him again, we need lower interest rates. He asked him again, we need lower interest rates. No, no, no. Then he said, okay, well, we're going to put these tariffs. So he put the tariffs, and then the same day, he asked Powell again, we need lower interest rates. And Powell again, even after this tariff, even after last week with the whole stock market down at the end of the week, Powell still said, oh, it's a wait and see. Well, let's not do anything drastic yet, right? But what's going to happen soon is he's going to have to do something drastic. That would be Jerome Powell, head of the Fed Reserve, because all his buddies are going to suddenly start losing, and already have started losing, millions of dollars. And his elitist friends are going to start pushing to say, we need these stocks to go back up in price. You need to do something. You need to lower interest rates, right? There's going to be a recession. Well, we have to avoid the recession, or if there's a slight recession, we have to immediately get out of this recession. What's he going to do? He's going to lower the interest rates. Again, this goes back to what I said in the middle of the show. Once the interest rates are low, then the U.S. can finance. They have to refinance $10 trillion of their national debt this year is due. So they need to do that with a very low interest rate, ideally. Once the interest rate lowers, and I'm going on the record to say right now, one way or the other, those interest rates are going to come down by the end of the year. They have to, because this refinance of $10 trillion needs to be done, and it needs to be done at a low interest rate. Just refinancing, just the interest on last year, the total debt, 36 trillion, was $1 trillion last year. 1 year, the interest was $1 trillion, 950 something billion, $1 trillion, which is more than their defense budget, right? It's just insane kind of numbers. And if they refinance 10 trillion bucks at a high interest rate, then that $1 trillion is suddenly going to come, 1.3 trillion. Like it's going to go exponentially higher. So is it legitimately trying to bring industry back home? Is it additionally just to try and get the interest rates lowered? I feel like it's a combination of both. Now, again, make no mistake, those rates are going to come down, and they're going to come down a lot more than this, Powell has suggested the interest rates are going to come down 0.25% twice this year, so 0.25% twice. I anticipate that this is going to change drastically, and we're going to see about 2% drop in interest rates this year. Once this happens, folks, expect that the stock market and that the biddy and everything that follows the biddy is going to boom like a motherfucker, and this will definitely happen soon enough. The next couple of weeks will be very telling. In fact, even tomorrow is going to be very telling with the Bitcoin. It seems like the stock market is going to hit more lows. Let's check that Nikkei one more time. And the Nikkei is currently still down 6%. It's down even more than when we checked the first time. It's down 2,000 points out of, it's at 31,781, down exactly 2,000 points, which equals to 5.92%. And the Hang Seng, the Chinese, is down 8.61%. So just a thrashing on the markets. The S&P was down on Friday 5.97%, Dow Jones 5.5%, New York Stock Exchange 6.12%, and the Nasdaq 5.82%. MicroStrategy was up 4%, interestingly enough. So I expect to see another bloodbath tomorrow on the U.S. side of the traditional financial markets, and it really is time to buy the dip, folks. I told you I already bought the dip today, whatever small amount I could afford. And, well, what do? Okay, you bought the dip today and the price go down again tomorrow. Well, I'm going to buy the fucking dip again, right? And just keep averaging down. The markets can't go down forever, especially with, digital gold, Bitcoin, and this kind of situation. I'm sticking with the big three. I'm sticking with Bitcoin, Solana, XRP. I had already bought the dip on, some others that have a big upside. So we're talking, things that were way down, 1 year lows. I bought Algorand, I bought Injective, I bought Doge. Last time we hit this same level, support level, where Bitcoin was at this $77,000. So, today I bought Solana. For me, I got into Bitcoin so long ago that I would be averaging up on Bitcoin. It's just, it's hard. And I'd be averaging up on XRP. So Solana is something I didn't really have much of, so I've been kind of averaging in slowly on it. I feel like it likely will outperform Bitcoin in terms of percentage gains. And make no mistake, in the fall, when we hit the cycle peak, I will be dumping that Solana and putting it into Bitcoin, right? It's not my long-term objective, but there is, to me, the potential of it going up more than Bitcoin in terms of, Bitcoin might go up 2-3x Solana because of its lower price at, $105-$10 or something. It could very easily go up 5x, 10x to $1,000. It was already at $500 earlier this year. So, there's a big upside for it. Folks, as I say every day, there is so much money out there in the world, so you should go get some. There's $900 trillion in assets around the world. Well, as of Friday, maybe there's $800 trillion. Who knows? Everything's gone down quite a bit because of these tariffs. But again, what do we always say? When the prices go down, things are on sale. I've said it many times. When there's a sale at, Best Buy, there's a lineup freaking 100 feet long out the door around the corner. But when there's a sale on the stock market or on Bitcoin, everybody's running the other way like it's the end of the world. The smart money is buying. This is when you buy. This is when you average down. If you had bought, Bitcoin when it was at 90 grand, 100 grand, and now it's at 77. Well, that's almost a 25% discount. So look at it that way. jump on it, buy the dip. If the price goes down again, buy the dip. Ideally, you buy it low, and by tomorrow or next week, you're already making money. This is why buying prices when they're at all-time highs doesn't make sense, because then it's going to have to go up quite a bit more just for you to start making money. Let's just open up the chart one more time to kind of give you a fair example of what I'm talking about. So let's say, you know, again, basic economics, and this is something everybody should kind of follow and learn. So let's say you bought Bitcoin here, or let's say you even bought it here, 95,000, right? You might have to wait a long time for the price to go up. If you bought here and the price goes back to where it normally is, you already made, you know, here you buy it at 77 and it goes up in a few days to 88. Well, that's over 10%. So you're already in the green. This is why I keep saying buy the fucking dip. I even have an episode called Buy the Dip, and I think I named it Buy the fucking Dip. So that's what I'm doing, and that's what I've done, and that's what I'll continue to do. And that would be the best way to invest, because you're buying when the prices are low, effectively buying something when it's on sale, rather than buying something when the prices are high. So again, I didn't have the chart up. Instead of buying up here or at the peak, where you might have to wait a very long time for the prices to go up, if you're buying at this level, and even if it goes back to this, you know, from 77 to 88, you're already in the green. You know, a week goes by, you've made cash. If you're buying up here, you might need to wait a very long time. Like if you bought up here, you're still waiting, right? Or you sold at a loss, thinking, you know, that, oh, Bitcoin's done with, we're still, no. But if you buy at the low, right away, you can be in the green. If you buy at the low and the price comes down even more, well, you buy it again low. So if you bought now at 77 and then, oh, the price dipped back to these levels, which I really don't think we're going to see. So you bought again. So let's say it goes to 65. You buy again, and then your average price is then, you know, 72, 73. Still in a very good position for when the price goes back up to 80 something or 100 and something or 190, which we've talked about, which I wouldn't be surprised if the price goes to these levels in the next several months, once the M2 money supply starts growing, you know, printing of money, which we know is going to happen. The EU already said they're printing $1 trillion. The States has to print money to bring this agenda of manufacturing back home. China's screwed because their interest rates are already as low as possible, which were at 1%, and there's nowhere for them to go. Their housing market's crashed. They need to do something. Also, they need to, they have a huge debt. So the money printer is going to start. And once the M2 money supply starts increasing, then we're going to see, which we already saw M2. This is the US chart here. Let's refresh M2 here. And easy to view. Yeah, like right here, look, a bit of a steep increase, right? If we go over the 10-year, you see this last little bit, we're starting to push up. And that's the States. So globally, they're going to start printing a lot of money. It's a known thing. Once that happens, the Bitcoin price is going to follow it up. Once the interest rates get lowered, the Bitcoin is going to go way up. There's a lot of things pointing to a higher Bitcoin price. So get out there, get yours, buy the dip. Again, $800, $900 trillion of assets around the world, folks. So go out, get your share of it. Money is abundant. Money is everywhere. It's time that's scarce. So use your time wisely, everybody. Spend less money than what you earn. Stop buying plastic crap and then replacing it with a modern, more fancier piece of plastic crap 2 years later. This is what they want. They want you to be consumers. They want you to be poor. No, you want to be a saver. You want to be an investor, and you want to be on the positive side of things. So if you start making more money, start saving more money. Don't start spending more money. It doesn't make sense. Start saving and investing in your late teens or early 20s. And ideally, you can retire when you're 40 or 45 instead of 65, 70, when you can't even do the things you love anymore, right? If you've got a great idea, start with it today. Even if you're not ready, jump on that idea, and hopefully it goes well with some effort. And if it doesn't, then you learn from that mistake, and the next time you try it, things will go better, right? That's how things work. People learn from their mistakes. Most businesses fail at some part or another on their first attempt, but when they try 2-3 times, things go well. You know, some of the best things, you know, Edison failed 10,000 times before he invented the light bulb. Dyson said he was on one of these late night talk shows, and he said, I'm a failure. He said, I failed 5,000 times, but I got it right on 5,001. And you see this big vacuum, you know, Dyson, probably between him and Elon Musk, maybe the two top inventors of our time. Let's face it, right? At least that we, you know, known inventors. Folks, I am on path to have over 500. I'd like to have 1,000 subscribers by the end of this year. So please do join me on this ride. If you enjoy what we're talking about here, hit that subscribe button, please. It is completely free to do so, and I will keep bringing the latest news from around the world and the crypto industry for you guys, and keep finding the best stories so you don't have to. So if you found the stream enjoyable, please share, like, comment, and subscribe, and we will see you on the next stream. Folks, thanks so much for joining.